Good morning, everybody. Thanks for joining us. I'll give everybody just another minute to come in. This is Michael from Game Edge coming to you on Monday, November 10th with our pre-market prep session. So as always, we'll cover our three pillars here at Game Edge: sentiment, structure, and trend. We'll give everybody another minute to file in. Appreciate everybody for joining us on our open mic last night. That was great. We had posted that to X and YouTube. Had a nice interaction. So make sure you go back and check that recording. We covered our trend, just some tools we use, how we look at the SPX option structure, and then I went through some individual equities at the end that some of the people that were joining us wanted us to cover ticker-wise. So definitely go back and review that. And then if you have any questions, you can respond on X and YouTube, and we'll try to get back to you as soon as possible. So. All right, we'll go ahead and get started. As always, we start with our market trend model. This sets the trend for us, how market participants are buying versus selling. This is based on the tick index. Quick orientation, the bolded white line here, if you've never joined us before, is our cumulative tick or our CT. This indicates instantaneous or intraday buying versus selling in the overall market by market participants. The second orientation is our colored ribbon. This is our longer look back period. This is how we look at our mechanical portfolios as well as longer term positioning. This is the tick US. This is a little bit more sensitive tick. This includes all the exchanges. The main takeaway up here is this is our breadth indicator, new highs versus new lows. We've seen new lows outpacing new highs for a significant number of days, obviously leading to the overall market pullback. And then our filtered cumulative tick indicator, this is just larger block orders. Plus 1,000, minus 1,000, just larger institutions or market participants. We did recover into the afternoon on Friday, but as you can see, extensive selling for the past few days. And if we scroll back in the market trend model, we had larger negative numbers for quite a few days, indicating institutions, market participants were selling. But we recovered here, and we're going to see what this looks like heading into this week. We want to see this live at least above the zero line. And we also would like to see a linear up day with almost a 45-degree angle for accumulation or more buying versus selling. That would indicate that institutions or larger market participants are moving back into the overall market. Moving on to the zero line here, cumulative tick, we want to see this just above the zero line to indicate more buying versus selling in the overall market. All right, moving on to the tick RC. Again, this is how we set up our mechanical portfolios. Again, colored ribbon here. You see the red below the cyan. So all of our triggers are turned off for our mechanical portfolios. Those would include the P-Trans to PGX as well as the wheel strategy portfolio. Again, the bolded CT, we started to recover these shorter term momentum moving averages into the afternoon on Friday. We have seen this recovery before, but as you scroll back to the pre-market prep on this day, I said we were prone to failure when we're under the colored ribbon, and that continues to be the stance. If we move above the colored ribbon with the bolded CT, then we could be moving into an overall possible change to an uptrend. Good morning, Paul. If you want to join, I can send you a link and you can join if you want to add some commentary. But again, we're prone to failure as long as we're under the colored ribbon. We're in the stance that you sell the overall moves to the upside until we recover this colored ribbon and start to see this bolded white CT start to emerge above this colored ribbon, obviously indicating more buying versus selling in the overall market. And 75% of stocks follow the general overall market. So if the market is moving up, then those would be overall stocks would be appreciating to the upside. So we'll keep an intent eye on this at the open. Again, prone to failure. We've seen this historically. Or do we recover the colored ribbon and start moving to the upside, changing our trend as well as triggering our mechanical portfolios to turn back on? All right, moving on the SPX. This is obviously the SPX options complex. Largest, most notional value. That's why we look at the SPX. We separate it in the SPXA. Those are the AM expiries. This is institutional positioning. These contracts don't turn over as rapidly as you can see via our web app. This is a new look for our web app tool. We're rolling this out to some beta testing. So I'll show a few screenshots of it. Again, just some changes that are coming, more widgetized, more availability for the users to change the overall dashboard to their liking and able to save those occurrences and for the dashboard. So we'll see how this continues through our beta testing. We hope to roll this out soon to our members as well as the community. So again, back to the SPXA. Again, transition areas, these are going to be important to stay above. As we always say, if we're above transition, we give the edge to the bulls. You see we're call dominated now, or continue to be call dominated for the November expiry. So institutions are still positioning for upside speculation. You will notice that the net delta column that was extensively green now has some red. So we want to look at those areas above spot price. Those are in the money puts overhead. Those will be headwinds. As well as out of the money put speculation to the downside, depending on where spot price is. Obviously, this updated spot price will move up at the open towards the 6,800 level. So again, staying above the transitions will be key for the bulls on this SPXA timeframe. So we'll continue to watch this, but we are call dominated via the institutional positioning. So again, supportive type action on pullbacks until that changes. All right, moving on the SPXP, all expiries turned on here. You'll notice we're put dominated. Then these expiries on out in time with the large expiry. Now we're moving into the December 31st expiry, as well as the November 14th expiry, which obviously is this Friday. And then the 28th is the next expiry with the largest GEX expiration. So quick takeaway, put dominated above and below spot price. You see our projected implied open 67.95. Again, that will be above the transition level. So we give the edge to the bulls there. But the key takeaway here is the net delta column, obviously red extensively up and down in the right-hand plane, which is above spot price, left-hand plane below spot price. So we do have overall bearish positioning that will be difficult to overcome to the upside, as well as out of the money put speculation to the downside. So for bulls, we would need to see this start extensively changing back to green, indicating out of the money speculation to the upside, as well as out of the money puts to the downside, at least closing or expiring, exposing those in the money calls that will continue to be supportive. We've added these Gamma, Charm, and Vanna numerical columns, and these can also be represented by bars. So that will be a feature that I think is nice for members using this new updated web app here. All right, let's move on to the SPXP GEX ratio here. This is an interactive chart that you can scroll through. As always here at Game Edge with our hyperlinks. We've talked about this extensively really the past week. This is the short-dated call gamma versus short-dated put gamma ratio. You could look at this as a put call ratio, but we add a time component, which is gamma, which I think is very important for short-term positioning from a trader's perspective. So again, you can see this at that peak that we talked about up there at 3.5. The gamma ratio has just continued to drop or collapse, indicating short-dated call gamma or call speculation leaving the overall complex. And what that leads to is the not ability for upside appreciation as the out-of-the-money call speculation completely left the complex. As we said in these few days, when the GEX ratio was continuing to drop, it's still above 1. We could recover, but then when we got below 1 and saw the ratio continue to drop, it gets resolved one of two ways. The SPX spot price continues to drop till we reach an extreme, and then we'll see an overall turning back to the upside. The GEX ratio will turn back to the upside, indicating the short-dated put speculation is having a washout when we reach this 0.5 extreme. Historically, that's been an area where we can look for a bounce, and we noticed that bounce on this day, and then we saw the overall resultant sell-off continuing as we did not have a significant bounce in the GEX ratio, indicating how the money call speculation was coming in to the overall complex, and now we're moving down. Saw a significant move to the upside on Friday, a long tail here. We do have a positive slope on the GEX ratio, but we're still just below that one level at 0.95. So we give an edge to the bears, but we do have a positive slope here. So what we would need to see for the bulls is this ratio continue to rise as SPX spot price continues to rise, indicating call speculation is coming into the complex, and the short-dated call gamma is continuing to rise with the out of the money speculation, and that would put a positive slope on this GEX ratio, as well as drive it above the 1 level to the upside. As we've seen over here, as the SPX continue to rise in spot price, we saw the GEX ratio continuing to make higher highs and higher lows. So we'll continue to watch this day over day. But again, this is just another tool to keep a great eye on for overall positioning of market participants. All right, let's move on to the Delta balance. So we're gapping up this morning. I forgot to run this with the forced spot price. So again, this projected expiry on out in time may change. The key takeaway, though, is the positive slope. We separate this in a left-hand plane, which is below spot price. That would be the red dotted line, and the right-hand plane, which is the green dotted line, and then our delta balance is the aggregate. Again, key takeaway is the green dotted line needs to be extensively rising in a positive slope above the zero line. That would indicate out of the money call speculation to the upside. So again, the overall market does not go where the option speculation is not. So we would need to see the speculation continue to rise to the upside. This left-hand plane rising, we would assume that the most likely that was a washout of the puts to the downside, that out of the money put speculation. And now we're seeing some in the money calls being exposed below us. Again, those will be supportive on pullbacks, but we need to see this continue to rise, indicating those out of the money put speculators are seeing some fear in closing, or at least expiring through the days. And then the delta balance is the aggregate. Again, we would need to see this above zero, indicating the bulls are trying to take overall control of the structure as well as the speculation to the upside. All right, let's move on to the SPXP net stack command. High sensitivity levels for today. So let's take it line by line. This net delta column is in the money calls below us at 67.50. You can see the left-hand plane integral is significant. Again, those will be supportive on any pullback. As of now, where we are this morning, this spot price was forced at 67.89. So we're slightly higher than that, possibly at the open, but this should not change very much. We indicate this as a locked horns position. We covered that last night on our extensive mic. Locked horns is in the money calls below us. In the money puts above us at 6,900. Obviously, that strike is significantly higher, but these will continue to be a headwind overhead for a push up unless we see this change to out of the money call speculation. So we'll continue to watch that as we traverse the SPX option structure. Key takeaway, 67.50 should be supportive on a move down. We see charm 67.50 below us in the money calls. Again, those will continue to be supportive as we continue to move down. And then out of the money calls below us, will be the largest headwind for the day at 68.50. We're calling this most likely to be the cap on price. It will be difficult to move above this unless we see extensive out of the money call speculation via our intraday vol M command and vol D command, where we look at overall out of the money or overall call speculation versus put speculation. So again, this will most likely be the headwind. 6,800 will be the first stopping area that we would watch for interaction, and then 68.50 most likely would be a cap on price on the upside. The gamma, obviously, out of the money calls here at 68.50. Again, high sensitivity level there. If we continue to move down, you'll notice that the right-hand plane has extensive more gamma than the left-hand plane. So we will not be removing as much delta as if we move down on the in the money calls below us, as well as if we add out of the money calls above us. Those will continue to provide fuel to the upside. Again, 68.50 would be that overall goalpost to the upside. And then Vanna, again, we're set up if we do see a drop in volatility and we see out of the money calls going in, the right-hand plane is extensively larger than the left-hand plane. So this could add, again, some fuel to the fire and would be a nice tailwind up towards 68.50. So you see a confluence and an overall theme there with the 68.50 level. All right, let's move on to 0DT for today. Call dominated as we start the day above and below spot price. You'll notice the transitions. The GEX transition is a little bit wider than the DEX transition. These are overlapping but offset. So again, this is slightly cautionary, but if we are, if spot price is above the transition for a long distance, again, we give the edge to the bulls. But an overall pullback to the top of the drunken sailor range at 67.60 or 67.50 would not be out of the realm of possibilities. And you see that first sensitivity gradient there at 6,800. And then a move up towards 68.50 would be overall cap on price. But you'll notice these net deltas overhead, as we discussed via the net stack command. These are in the money puts. So again, those will be a headwind and difficult to move above. Unless we see the fear component as a spot price appreciates, then we do see some closing of those, as well as out of the money calls being added. Key takeaway, as I discussed last week on our turning point post of the overall market on Thursday and Friday, we can see the out of the money puts continue to close. And then if that is met with out of the money calls to the upside, then we can probability have price appreciation. But if that is not met with out of the money call speculation, as we showed via our vol M command, then it's going to be difficult for price appreciation. You have to have both of those occurring. The out of the money puts or closing or put monetization can only drive spot price so high. And then we reach that balance point. but then you have to see the out of the money call speculation kick in. That would be adding positive deltas to our book and negative deltas to the dealer's book, and they have to buy to hedge. So again, that is a key component of a Vanna rally, as well as spot price appreciation to the upside, adding deltas to the overall complex. So with that, we'll move on to the trading view chart. Again, 6,800, I've already outlined that just with a yellow line, extensive or high sensitivity area to the upside that we've tested multiple times. We're just continuing to chop around there at the open. So we'll watch that for a failure at the open or taking that 6,800. If we take that 6,800 level, would be long for a move up towards 6,815 to 6,820, and then up towards 6,850 obviously would be the goalpost to the upside. If we continue to fail the 6,800, possibility to move back down towards the top of drunken sailor range at 6,760, or even back down towards 6,750. Again, that may be an opportunity to short, depending on what the market trend model looks like and our intraday call versus put speculation. If we do drop into the middle of DS, then we have transitions below us down towards 67.30 all the way down towards 67.10. Again, those would be the line in the sand to at least stay above for the bulls. And if we start losing those, then obviously the market is not prepared or not positioning to move higher for this time frame or from the news that we are getting coming through, obviously with the possible opening of the government now and a deal being made. So again, a quick takeaway, 6,800 to the upside. We'll watch that. Top of DS, 6,760 on a pullback. Above 6,800, we would be long. Possible short at 6,800 for a move back down towards DS. And then staying above transitions will be key as we head into the day. So this morning, thank you everybody for joining us. You can check us out at gammaedge.us since we're bringing this to you this morning. Click on the newsletter tab, punch in your email. You'll be delivered this newsletter on the weekend. Basically, it's Beyond the Bell. It is covers all of our thesis, all of our tools, and it's a nice weekend read. And then, as always, click on the free courses. This is our Game Edge Fast Pass course. This is kind of our flagship educations course that we put a extensive amount of time in producing for everyone to get up to speed on how to use our tools, as well as our methodology here at Game Edge. So you can sign up that for free, as well as 2 other trading courses here. So if anybody has any tickers they want to cover this morning, I'd be happy to cover those. Absolutely, Butch. If you want to go over any of individual equities, we can punch those in, look at the structure as we head into the day. But watching 6,800 there at the open pretty intently. We'll see how we react or interact without we're around that level. You could just set on your hands this morning, wait for the books to clear, as well as it's a large gap up away from key gamma delta levels, as well as transition. So you could give 30-minute opening range, which we always suggest to our members. Let the book clear, let us get some data in, and try to set their trajectory and course for the day, and see how market participants are speculating for the day. So. All right, thanks everybody for joining us. I'll hang around for a few minutes. Any individual equities you want to cover? Is your colored ribbon moving averages or positioning? Moving average. Yeah, historical turning points. Yeah, longer look back period. So. Soxel, yeah, we can check that one out. Yeah, absolutely, Mr. Hedge Fund. We always suggest that, just because with this gap up this morning, there's going to be probably extensive emotion both directions. If people were short over the weekend, whatever, thinking that there wasn't going to be a deal, or they were long over the weekend, just YOLO, out of the money, call speculation, or they had an overall position that they thought was going to play out. Most likely, you probably see some profit taking. They want to get paid for their risk over the weekend. At least I would, if I was long some sort of structure that was trying to take advantage of the upside, especially with a big gap up. A gap up is always a bonus for long. It's always a gift. So I always would look to take profit at least on part of your position. So we may see some pullback right at the open for some closing of those positions. So we'll see how that plays out. All right, SOXL has weekly expiries. So it's call dominated above and below spot price. Spot is above transition, so that's bullish. Highest sensitivity level or area that we look for, peak is 50. That's the peak X level. We do see COI at 45 though. So we'd like to see that continue to move up. That's the highest call open interest or speculation also. So you'd like to see both of those at 50 or at least the COI above 50. So upside most likely would be 50. The expected move is 9 points. So 20%, so 19%. So you're looking at 50 to the upside if the market cooperates, and SOXL is semiconductors. So that would be a contingent, right, on that whole group being appreciating or having interest in moving up. After the 14th, we see COI drop extensively. You see the transition widen, and then you see PGEX at 50. So again, not as advantageous for the bulls to the upside after this Friday's expiry. So hopefully that helps. All right. Okay, thanks everybody for joining us. Follow us and like and subscribe on X as well as YouTube. You'll be notified when we go live with any content. We'll try to do a midday market review if we can over our tools, depending on what the schedule allows for our team, as well as the post-market review of how we navigated the structure for the day. And as always, check out our open mic we had last night. Great interaction with the community. We're going to try to do those on Sundays, roughly around 8 Eastern. So make sure you set yourself a reminder to come join us on Sundays. So thanks everybody. Make it a great day. As always, manage risk, and we'll see you later.